Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SS Innovations International Inc. Annual Report. SS Innovations International Inc. is a commercial-stage surgical robotics company that offers a wide range of innovative products and services to the medical industry. At the core of its offerings are two primary systems: SC Mantra, a surgical robotics system, and SC Madra, a range of stapling, energy, and core instrumentations for surgical systems. The company's product portfolio is extensive, including micro-stapling devices, clip applicators, robotic staplers, and augmented reality tools. Its innovative products also include the SC Maya XR preoperative simulator, which is a robotic surgery platform, and the SC Chitrasa advanced DICOM viewer, an AI-enabled application viewer. In addition to its product offerings, SS Innovations International Inc. provides various services, including instrument tips, accessory products, teleproctoring and telesurgery products, installation, repair, maintenance, 24/7 technical support, and proactive system health monitoring services. The company also offers a range of surgical tools, such as forceps, scissors, electrocautery tools, scalpels, and other instruments. The company's sales strategy involves direct sales organizations and distributor networks to reach its global customer base. With its headquarters in Gurugram, India, SS Innovations International, Inc. is well-positioned to serve the growing demand for surgical robotics solutions worldwide. Some of the key products and services offered by SS Innovations International, Inc. include surgical robotic systems, SC Mantra, stapling, energy, and core instrumentations, SC Madra microstapling devices, NADI automated coronary anastomotic connector, clip applicators, SC Multifier clip applier, robotic staplers, SC robotic stapler, augmented reality tools, SC holographic anatomy, AI-enabled application viewers, SC Chitrasa advanced DICOM viewer, medical-grade devices, SC mixed reality headset, instrument tips, accessory products, sterile drapes, 3D stereo endoscopes, cannulas and seals, teleproctoring and telesurgery products, installation, repair, maintenance, 24/7 technical support, and proactive system health monitoring services. The stock price of SS Innovations International, Inc. SSII has plummeted by over 55.8% in the past year due to a combination of factors. One major concern is the company's lack of profitability despite impressive revenue growth. Despite reporting significant increases in revenue, SSII consistently posts negative earnings per share, return on equity, net income, and free cash flow, raising questions about its long-term sustainability. The company's valuation has also been a point of contention. Even after the substantial price drop, SSII's price-to-sales ratio remains significantly higher than the industry median, making it an ultra-expensive stock in terms of valuation. Analyst opinions have also contributed to the downward pressure, with some downgrades and a consensus sell rating for the stock. Furthermore, the company's equity offerings and share dilution have likely had a negative impact on its stock price. The recent private placement, which raised $18.6 million by selling 5.7 million shares at a price below the current trading price, may have contributed to dilution and downward pressure on the stock. Additionally, SSII's underperformance compared to its industry peers has also weighed heavily on its stock price. Overall, these financial concerns and market perceptions appear to be the main drivers behind SSII's significant stock price decline over the last year. While the company has made advancements in surgical robotics, its lack of profitability and high valuation have raised red flags among investors, leading to a bearish trend in its stock price. SS Innovations International, Inc. market capitalization of $1 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that SS Innovations International, Inc. holds a significant advantage in their industry. SS Innovations International, Inc. trades at a higher price-to-book ratio of 22.44 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 68% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be attributed to a few key factors. System sales have been a significant contributor to revenue growth, with an increase from $19,457,767 in 2024 to $38,353,048 in 2025. This represents a substantial jump of nearly $19 million. Additionally, instrument sales have also seen a notable surge, rising by 239% from $942,548 in 2024 to $3,183,757 in 2025. These two areas are the primary drivers of revenue growth, indicating that investments in these sectors have paid off and contributed significantly to the company's financial performance. The company's financial situation has undergone some notable changes. A review of the total liabilities reveals an increase from $28.9 million to $36 million over time. This indicates a rise in the company's overall debt level. Furthermore, interest expenses have also seen a significant change. The interest expense increased from $973,235 to $1,108,637. This suggests that the company is paying more in interest on its debts, which could be due to various factors such as higher borrowing costs or an increase in outstanding principal amounts. Overall, these changes suggest that the company's debt level and interest expenses have indeed changed significantly over time. Management's comments on the company outlook are centered around two key areas: financial stability and strategic growth. Firstly, there is substantial doubt about the company's ability to continue as a going concern due to its dependence on further funding. This suggests that management acknowledges the company's vulnerability in terms of liquidity. However, despite this uncertainty, management remains optimistic about the company's prospects for long-term sustainability. They believe that their position will be sustained upon final examination by tax authorities regarding transfer pricing adjustments. Furthermore, they intend to utilize the net proceeds from a private placement to advance growth initiatives in key markets such as India and existing global markets. Management also has plans to expand into new territories, including the United States and European Union. This indicates that despite current financial challenges, management is committed to driving forward with strategic growth initiatives. Overall, while there are concerns about the company's immediate financial stability, management remains focused on long-term prospects for expansion and growth. The company's financial transactions over the past year are notable for their lack of significant acquisitions or divestitures. A review of key pages reveals that there have been no major acquisitions, with no mentions on page 6 and none initially noted on page 11. However, a closer look at page 11 does reveal lease agreements for office, manufacturing, and assembly space in Gurugram, India, which could be seen as a form of acquisition, albeit a smaller-scale one. In terms of divestitures, the company has also been relatively inactive, with no mentions on either page 6 or page 11. This suggests that the company is focused on maintaining its existing assets and operations rather than expanding through acquisitions or shedding non-core businesses through divestitures. The recent financial data reveals a concerning trend in inventory buildup and potential supply chain disruption. The company's inventory has seen a significant increase of $6,857,104 from December 31, 2024 to December 31, 2025. This substantial rise in inventory levels may indicate that the company is struggling to manage its stock effectively, potentially leading to waste or obsolescence. Furthermore, the sharp increase in accounts receivable, net by $8,932,495 during the same period, suggests that the company's customers are taking longer to pay their debts. This could be a sign of cash flow issues, and may indicate that the supply chain is experiencing disruptions, making it difficult for the company to meet its payment obligations on time. That concludes the financial summary for SS Innovations International Inc. Feel free to comment below, and I will be happy to answer them when possible.